Hi, this is Nick Freitas, and welcome back to Making the Argument. So, May 15th is coming up, and what does May 15th mean to all of us this year? Well, it means it's tax time. You got to fill out your federal income taxes. And of course, based off of the speech that we just heard from Joe Biden, he is adamant about making sure that people pay their fair share. And it's not just Joe Biden, Elizabeth Warren, Bernie Sanders, Alexandria Ocasio-Cortez. We hear this all the time about fair share. And so here's what I wanted to do today. I want to go over what does the tax code actually look like within the United States? And then we're going to ask the question, what is a fair share? Who is currently paying taxes? What does it cost us to pay taxes? What are the different taxes that we actually have to pay? And we're going to answer a lot of those questions that I know I've received from people. Questions like, what is a fair share? Questions like, can we afford more tax cuts? Questions like, do corporations really get away with not paying any taxes despite the fact that they can be incredibly profitable? We're going to answer all those questions today. Okay, and so here's what we're going to start off with. We're going to start off with the very nature of taxation, right? And the very nature of taxation in this country, if you read the Constitution, and what was the federal government allowed to tax? Because it used to be that the federal government pretty much raised its revenue through things like tariffs or excise taxes, right? So a tariff is a tax on a foreign good. So if I want to buy something that was made in England and they sell it here, well, then I would pay an additional tax on top of what it would actually cost to just pay for that good or service, and the federal government took that money, right? So tariffs were a large portion of the way the federal government, collected revenue and spent it. Obviously, that's not the primary way the federal government collects money now. So what changed? Well, the first income tax we ever had in this country started during the Civil War, but really the modern income tax, as we understand it today, was started in 1913, right? It was started with the 16th Amendment to the Constitution, where the federal government passed an amendment, all right, and the states ratified it, saying that the federal government could now collect a federal income tax. Now, originally, they were going to put a 3% cap on that federal income tax, but they didn't do that. And one of the reasons why they didn't do that is because there was a lot of legislators, because the way the concept was originally written, it was going to be a 1% tax. And then in the amendment, they were going to put a 3% cap. And a lot of legislators were opposed to that because they said, well, my gosh, if you're only going to charge 1%, but you put in the amendment that the federal government could charge up to 3%, well, then that's what they're going to charge. Now, in hindsight, I think we all wish, even if they were going to pass the 16th Amendment, which I wish they didn't, but if they're going to pass it, I think now looking in hindsight, most of us wish they would have just put in the 3% cap. Because if you look at the overall tax rates now, it's significantly higher based off of the marginal tax rates that we have. Okay, but that is when the federal government all of a sudden assumed this power to be able to tax income. But is that the only way that we're taxed in this country? Well, clearly it isn't, right? There's three general categories that we're taxed. Some of them are by the federal government, some of them are by state and local government. So what are those three categories? All right, well, the first way, you can define it this way. You are taxed on what you earn, you are taxed on what you buy, and you are taxed on what you own. All right, so what you earn, income, right? The most common version of this are things like when you pay your federal income taxes or your state income taxes if you live in a state that has income tax. Capital gains tax, right? Capital gains is a tax you pay on money you've already paid taxes on, but since you reinvested it and made more money off of it, they tax you once again, right? That's capital gain. Those are all taxes on earnings, right? Taxes on what you buy. What's an example of that? Sales taxes. So every time you go in and you buy a new car or you buy a piece of property or whatever it is, you generally pay sales tax. Now, again, there's some taxes there's some states that don't have sales taxes, right? But most states do. So you pay a tax for every time you engage in a market transaction. Some countries have what they call a value-added tax, which is also a form of a sales tax. And then that third category, you're also taxed on what you own. So the most obvious version of this is property taxes. If you own a home or if you own property, you pay taxes for the privilege of owning that property, right? Now, some states have what they also call tangible property. Like a lot of times we associate property tax with like a home, but you also pay property taxes on things like your car. Here in Virginia, they actually charge businesses a tax on property they own in order to conduct business. So even if the business doesn't make any money, right, which a lot of businesses when they first start up for several years won't be making a profit, doesn't matter. The government will tax you on the property that you own in order to conduct your business. That's another form of property taxes, right? So there's multiple ways that you are taxed in this country, multiple ways. Now, the sales tax, a lot of times people will talk about the sales tax or the property taxes as being more regressive. And the reason why is because there's almost no way to get around it, right? There's almost no way to get around it. Chances are you're going to eat out occasionally. You're going to buy clothes at the store. You're going to buy groceries. There's any number of things that you buy that potentially have a sales tax associated with it. And so that's one of the taxes that pretty much all of us pay. Property taxes are another one. Obviously, if you own a home, you're paying property taxes. Now, some people say, well, what about renters? Well, typically property taxes are worked into the rental property as well. So a renter is also, to some degree, also paying property taxes, right? So those are the taxes that pretty much everyone pay. But that begs the question, what about income taxes? Does everybody pay income tax? Because a lot of times when the federal government is talking about people paying their fair share, or when the federal government is talking about raising taxes, they mean income taxes, or they mean something like corporate taxes. And it's important to understand corporate taxes is it's another tax on earning. It falls into that broad category. Income tax, capital gain tax, corporate taxes, those are all taxes on what you earn. Right? But the federal government typically isn't charging property taxes or sales taxes. They're typically charging income taxes, corporate taxes, capital gains taxes. That's what the federal government is raising revenue. So when they talk about raising taxes or when they talk about paying their fair share, that's generally the category they're talking about. And so this begs the question, who is actually paying those taxes? Because according to Joe Biden and Elizabeth Warren, the rich are not paying their fair share. Now, you'll notice something. They never really define what rich is. I mean, every once in a while they'll throw out a number, right? No one's taxes are going to go up if you're making over $250,000 a year. Or no one's taxes are going to go up if you're making over $400,000 a year. They'll say things like that. But they never actually define what is rich, what does wealthy mean. The other thing that they never define is what is a fair share. And so I think one of the most important things that we can do today on this podcast is give you an argument for the fair share component of this discussion. Because if we don't define fair share, if we don't define our terms, well then fair share is an empty bucket that any politician can use to mean anything they want.